Hello, I'm James Rose with Rose Development in St. George, Utah. And this video is for people who are interested in learning more about opportunity zones and qualified opportunity funds. Qualified opportunity funds and qualified opportunity zone businesses. So this is part of the new tax law. It's it's kind of a new thing. It is a new thing for everybody in the U.S. It's never happened before. And it's the mechanism by which you're able to take capital gains out of any investment that you have, whether it be a house or a company, wherever you could realize capital gains, and move those gains into an opportunity fund. An opportunity fund must be formed after January 1st, 2018, inside of a zone. What are these zones? These are special economically depressed zones as determined by the 2010 Census Tract throughout the United States and nominated by each governor to the Department of the Treasury as a zone that needs economic impact. And so they're based off the census tracts. And here in St. George, Utah, we have two. And one of them is right here downtown where we already have our offices. And so when this first started to happen, we got word and we started looking into it and we started learning about what it means. And so if you are an investor or you are a professional like an accountant or an attorney who has clients or even a realtor, you need to know about this law. You need to know about this opportunity for your clients. If you're an investor, you need to know about this because there's never been a time in the history of the United States where you can move your gains out of the stock market and into, for example, real estate as a tax play for capital gains. It sounds kind of confusing, but let me make it really simple. You sell your asset, whatever asset that is that you have capital gains in, then you move that money into a fund that's located inside of an opportunity zone. There are two main parts to the tax law, the two main benefits that you get at that point. Number one is you don't eliminate the taxes completely from the first transaction, from when you sold your investment and moved it into an opportunity fund. But what you do get to do is you get to delay those taxes, the payment of those taxes, and get an increase in the basis, okay, up to 15% if you do it this year in 2019. Up to 15% increase in the basis, so it lowers your tax burden. And secondly, you don't have to pay the tax on that until December 31st, 2026. So it's kind of like getting a tax-free loan from the government where you don't have to pay the taxes until 2026, right? Till December 31st, 2026, again. And so that's a major benefit. So you can put it into a fund and that money can grow, with the money that you would have normally paid the IRS until 2026, when you would, if you did it this year, pay 15% step up, with this 15% step up in the basis, your taxes. So the other benefit that we have, the second major benefit from the law, and it's called 1400Z, so 1400Z of the IRS tax code, is that during that time, on what I call the second transaction, so the first transaction, you sell your stock, you sell your house, your investment property, that is, and you move your money into the fund and you get that first benefit. The second, that's the first transaction. The second transaction is the time that the money's inside the fund, right, growing. Well, if you leave your money inside the fund for 10 years, that money's 100% tax-free as it relates to capital gains. So this is the biggest thing that's ever happened tax-wise in my career. I've been doing this for 20 years. I've been doing real estate and construction development for 20 years. And we've worked with 1031 exchanges and deferring the taxes, but never before have we been given something this powerful to stimulate the economy and to stimulate these zones. And that's the main purpose of it, is to stimulate these zones. So the law came out, and everybody was like, oh man, what is this? Right? Because there were no guidelines from the IRS, there was no regulation. And so we have spent a lot of time learning all the nuances of the law. And what happens when a new law like this comes out is that the Department of the Treasury puts out these guidelines. Like, for example, here we have investing in qualified opportunity funds, agency, the IRS, action. This was a notice of proposed rulemaking and notice of public hearing. So this came out last October, right? So imagine it's like almost a year since the law was enacted, which was November of 2017. Almost a year before the first set of guidelines and proposed rulemaking came out with the IRS. So this is why even still people are still learning about it. So it came out and it said basically, some of the things I just said, and that there was going to be a hearing on January 10th, 2019 at 10 a.m. in Washington, D.C. in the main IRS building. Well, this was pretty exciting for us. We'd already, by the time this happened, by the time these came out, we'd already formed our own fund, okay, without a lot of clarity. So, but we held back on actually filing with the IRS, the regulations, the Reg D forms. So we decided, okay, well, we'll wait till January 10th. But then on January 10th, as many of you remember, the government got shut down, right? The government was shut down, and so we couldn't have that meeting. We booked our plane tickets, and we were all excited to be there in, the main building with the IRS, getting further clarification on the law. Well, government got shut down, so this hearing didn't happen. And they said, well, we'll let you know when the government opens back up, when we'll have that. Well, it just so happens, the government opened up shortly thereafter, and the only day they could find was Valentine's Day, right? So February 14th, I said to my wife, hey, I have a special Valentine's gift for you. And we went to Washington, D.C., and we ended up inside the room. There was a line outside the building, around down the street. We got there early. We stayed at the Trump Hotel, which is literally right next door to the IRS main building. And we went there. And we got inside, and we were able to witness this public hearing, and kind of how the way our government works and these new big tax laws and how things are done here in the United States, which is really a wonderful process. And there we met some very interesting people who were also there, attorneys and accountants and different experts in the space. And we became friends with them, and we started, opening up dialogue with them. And we realized through that process how important it is to talk about it with other people because, first of all, I'd encourage everybody to print it off and read through it if you're interested in learning more about it. It's not that big of a read. The first set of guidelines is only 73 pages. And then the second set of guidelines that came out of the meeting from February 14th is right here. And it is 168 pages and really contains the bulk of the clarifications that are needed, right, for people in the industry, people with capital gains, if you're an attorney, if you're an accountant, if you're a realtor, especially if you're handling real estate for the purpose of investment for your clients. I would encourage you to print these off and read with your marker, with your highlighter every day. Just read a little bit of it, and just get through it. You'll learn all of the different things that people talk about, in segments, but you'll get a firm foundation of what's really happening because it's something that the time is clicking on and not enough people are taking the time to learn about it. The other thing I would say about it is for those of us that are interested in it for our own capital gains, like myself and partners of mine, we've been retaining these different accountants and attorneys. Well, when you talk to your accountants and attorneys and your other professionals, it's really, really important that when they start talking to you about certain things, that you ask them where in the guidelines they're referencing. It's like when people read the good book, right? Or one of the many good books, and they're quoting things. It's like, you hear them quoting chapter and verse, right? Well, I think it's important enough, and it's small enough, really, the guidelines, that when we talk about it, we reference kind of where we're talking about and what page exactly we're finding that information on, so that everybody can get on the same page faster. Because I think that's the biggest problem that we're having right now, is that I hear people talk in circles, and they kind of are just repeating what other people say. And it's like when you start, with a long line of people, if you've ever done that exercise where you have a long line of people lined up, right? And you whisper something in the first guy's ear, and then he whispers it to the next person, and the next person, and the next person. And then by the time it gets to the person at the very front, it's something totally different, right? And I see that happening as I go to these conferences even. And I'll be sitting there listening to another group of panelists, and sometimes I'll hear him say bizarre things. And I know that that person has not read the regs. And it just blows me away, So I would encourage that. And so one of the things that we've been talking about here at Rose Development is starting kind of like a chat group, kind of starting a study group, if you will, where we go through and we start learning different segments of the law. And I think through that process, we will have a firmer foundation and we'll be able to do more things. Because here's what's exciting about it. With this tool that we've been given by our lawmakers, and it was a bipartisan law that was created, a bipartisan bill that was approved by both the Congress and the Senate and signed off by the president, right? With this tool, we can not only go into opportunity zones and develop new projects, whether it be hotels or whether it be buying an old house and refurbishing it, or any kind of real estate project that you can think of inside of a zone. We can build those projects and we can make the capital gains, the profits on those projects, totally tax-free. That is a huge benefit. But secondly, we can start new businesses, qualified opportunity zone businesses. And these qualified opportunity zone businesses can change people's lives. They provide jobs in these zones. They provide more benefit to the people around in other businesses that are already existing businesses. These are new businesses we're talking about. And then they can, when they're sold 10 years down the road, 100% of that money, that capital gain money, is tax-free. So imagine if you were Facebook. Imagine if you were Google, or if you were, any of the big companies you can think of right now that employed people inside of a zone. If they were to be done now, today, and headquartered inside of a zone, and then when those companies built up and were sold after 10 years, all of that money being tax-free. It's a big, big deal.